Hey everyone, welcome back to my channel. Today we're going to talk about the 2017 Tax Cuts and Jobs Act. Yes, we have a lot to cover. You saw the agenda, so I'm going to go through a high-level overview of those topics that you saw on the agenda. If you want more specifics about how the tax changes impact you directly, please consult your tax preparer or your accountant. We have a lot to cover, so what I'm going to do is break this up into 3 videos. The video today is going to discuss individuals, how the tax law impacts you as an individual. Part 2 is going to discuss how the tax laws impact you as a business, if you're a small business owner or a large business owner. And then the 3rd video is just going to talk about some miscellaneous changes in the tax laws that you may or may not be aware of. So the best thing that you can do, I think, is grab your 1040 from 2017 and your Schedule A. If you itemize, it's going to help you to be able to follow the discussion a little better and really get a clear understanding of how the tax laws will impact you. The changes will impact you. So before we get into the agenda, let me show you the new tax brackets, okay? So as you can see, the top tax bracket is 37%. That's down from 39.6% in 2017. And also the lowest tax bracket is 10%. That has not changed. The IRS has a new W-4 form available to adjust your withholdings in your paycheck if you feel as though you need to or want to do that. There's also an updated withholding calculator to help you to determine what your withholdings and exemptions should be to help you to determine what should be taken from your paycheck in terms of taxes or what have you. All right, so moving into the first topic, the standard deduction. The biggest takeaway from the changes in the tax law for most filers, individual filers, is going to be whether or not you still itemize. So here's the new standard deductions. As you can see, the standard deduction has been doubled for the most part. So let's talk about the standard deduction. The standard deduction is the amount filers can subtract from income if they don't list itemized write-offs, such as the mortgage interest, the charitable donations, state taxes, and so on the Schedule A. So since the standard deduction has been doubled, you may not have to itemize. You may no longer have to itemize. So if you look at your 1040 line 40, the standard deduction there, you see what the old deductions were for single or married filing separately, married filing jointly, and head of household. So those are the old deductions, old standard deductions. The new standard deductions have been doubled according to the chart that we saw previously, from 12,000, 24,000, and 18,000 single, married filing jointly, and head of household. So the standard deduction has been doubled. That's the biggest takeaway for individual tax filers. All right. Moving right along to the exemptions. If you look at line 42, if you look at line 42 of your 1040, you'll see where the personal exemption is calculated. So that is also another deduction from your taxable income. The standard deduction is a deduction in taxable income before you get to the calculation of your actual taxes. And then there's also the personal exemption, which is basically another deduction from your taxable income to help determine what your taxes are going to be. So that standard deduction was basically taking your number of exemptions that you claimed on page 1 of your 1040, which usually is yourself, a spouse, and however many children you're going to claim or dependents you're going to claim on page 1. That total number is carried over to page 2, line 42, and multiplied by the exemption amount, which I believe is $4,150. All right, so you take that, the number of exemptions, multiply that by 4050, and that gives you your personal exemption. That number is then deducted from your adjusted gross income to help get your taxable income down. So long story short, the personal exemption is going away. It has been repealed. That is the second most important change to your 1040 for 2018 going forward up through 2025. Personal exemption has been repealed. All right. And what they have done in order to mitigate this repeal is they've doubled the child tax credit, which is our next topic. Let's talk about the child tax credit. So let's keep in mind, a deduction reduces your taxable income, right? And a credit is a dollar for dollar reduction in your actual tax liability, your tax bill. So let's look at the credit. The credit for the child tax credit is going to be on line 52 of your 1040. And it has been expanded to $2,000 from $1,000 for each child under 17. Also, more families are going to be eligible for this credit. The credit now begins to phase out at $400,000 of income for couples and $200,000 for singles, compared with 2017, where the levels were $110,000 for couples and $75,000 for singles. So more people are going to be eligible for the child tax credits. But if you have dependents older than 17, you're not going to get the $2,000 credit. The child tax credit for dependents older than 17 is going to be $500. So in my opinion, the way this thing is reading so far is if you have dependents under the age of 17 and under, you're going to fare out pretty well. If you are someone who is filing single or head of household, and you have no dependents, or you have dependents older than 17, you're not going to fare out so well. So that's the child tax credit. Again, that's on line 52 of the 1040. And based on your income levels, you may also be eligible for the additional child tax credit, which is on line 67. And just for your information, there's no changes to the earned income credit. That goes nowhere. That stays the same throughout this new tax law change. So that's pretty much it for the 1040. Again, the big takeaway is whether or not you're going to have to itemize or just take the standard deduction. And we're going to talk about itemization in a little bit. That's coming up next. We have a lot to cover on itemized deduction. But listen to this. The Tax Policy Center is estimating that the number of filers who itemize for 2018 will be reduced by 50%. So 50% of us will not be itemizing anymore. This will help to simplify filings. You will no longer have to fill out a Schedule A and figure out what your deductions are. And you also may have a larger tax bill. I'm not sure. It's based on your individual situation. This doubling of the standard deduction also will ease the IRS's burden. Now they don't have to track as many deductions as before, because most people will be taking that standard deduction. But on the flip side, a lot of us are going to lose that deduction that we were taking for the mortgage interest, as well as the deduction for charitable contributions. So let's get a little bit further into that. Let's unpack this Schedule A itemized deductions issue here, or change. I shouldn't call it an issue, but it's a change, and it's a very big change at that. I have a lot of notes spread out on my table here. I had to do this from my kitchen because there was so much information that I had to cover. I have a lot of note cards. I don't want to miss out on giving you any good information, so bear with me here. I have a lot of things spread out on the table. The next topic is going to be everything else that we're going to discuss is going to be on your itemized deductions, your Schedule A. So let's take a look at that. So if you've itemized, let's walk through that and talk about what's going to change. So Schedule A, the first change is going to be to the medical and dental expenses. So unless you're in a nursing home or suffering from expensive chronic illness, you probably weren't taking this deduction anyways. But for 2017, the change to this particular item actually happened in 2017. It's good for 2018, but then in 2019, it goes back to what it originally was. So let me tell you about the change. So lawmakers lowered the threshold for taking the write-off from 10% to 7.5% of your AGI. So if you look at at your Schedule A or the Schedule A that's posted up here, you'll see that on line 3 for medical and dental expenses, the threshold was lowered to 7.5%. Again, it started 2017. It'll be in place for 2018. In 2019, it goes back up to 10%. You'll also see that in this example, the individual here did not qualify for the deduction because their medical expenses did not exceed the 7.5% of AGI. So again, most people, unless you are suffering from a chronic illness, weren't taking advantage of this deduction anyways. Okay. Moving on ahead, let's talk about the state and local taxes, also known as SALT. This was a big topic the end of last year and also going into the beginning of this year. A lot of state and local counties were trying to adjust their laws to accommodate for individual filers who may be disadvantaged due to this change. But basically, for state and local taxes, your deduction is limited to $10,000. So I don't know what you have on your line 9 of the Schedule A itemized deductions, but if it's more than $10,000, the excess over that, you're going to lose out on going forward up through 2025. All right, so SALT has been capped at $10,000. State and local governments are making adjustments, so stay tuned to your state and local governments to see if there's going to be some sort of state state credit you can take on your state filing. But for federal purposes, that's it. $10,000 is all you get. The states that are expected to be impacted the most by this change are New York, New Jersey, California, Connecticut, Maryland, and Oregon. So these states will be more impacted than others. This may or may not impact you depending on where you live. But SALT is capped at $10K. All right? That's what you need to know there. Moving on to the mortgage interest deduction. So for homeowners with existing mortgages, there is no change to the deduction. You can still deduct interest on mortgages up to $1 million. For homeowners with new mortgages taken out in 2018, you can only deduct interest on mortgages up to $750,000 of debt. So anything, any interest on mortgages higher than that threshold, you lose. Also, if you're taking out interest on a home equity loan, if there's interest on a home equity loan, you cannot deduct that for 2018 going forward. Any existing home equity loan interest can be deducted. So that's the change for the interest you paid section on your Schedule A. I think that's all I have for that section. So let's skip to the next section, which is gifts to charity, and talk about the charitable contributions and the changes that you can expect to take place there. Not much. The only change that I want to say here is that if you make cash donations, the percentage limitation on cash donations has been increased from 50% of AGI up to 60% of AGI. So you're able to make more of a cash donation to your charitable organizations. Nothing else has changed. If you give other donations, clothes, furniture, art, whatever, what have you, that has not changed. The only change that you have to worry about is whether or not your total itemized deductions are greater than the standard deduction, because you want the largest deduction, right? If your itemized deductions are lower than a standard deduction, no need to itemize. You would just take the standard deduction. So that's the change to charitable contributions. Let's talk about the last section, which is the Schedule A write-offs. And that's going to cover on your Schedule A lines 21 up through 28. And basically, the lawmakers have eliminated this entire section. It's been repealed. So most filers found it hard to qualify for this deduction because of the 2% threshold. In this example that we're showing here, the filer actually did not qualify for the deduction because they didn't meet the minimum threshold. So most filers don't get an opportunity to take it anyways. This entire section will be gone. I skipped over casualty and theft losses. The big takeaway for that one is that that deduction will still stand, but it has to be what the lawmakers are deeming a major disaster in order to get that deduction. For more information on that, please consult your tax advisor or your accountant. So let's look at the example that we have here for the itemized deductions. Here in this example, the filer has over $32,000 in itemized deductions. So assuming their situation is going to be the same or similar for 2018, they would benefit from likely taking the itemized deductions if they are filing as head of household, because the threshold for head of household is $18,000, right? Remember that this person's SALT deductions will be limited to $10,000, which would get them to actually $22,000 worth of standard deductions. And so they would still itemize as head of household, but if this was a married couple filing jointly, this whole itemized deduction exercise would be null and void, because the standard deduction for married filing jointly is $24,000. And in this example, for 2018, with the 2018 rules in place, they would only get a deduction of $22,000. So folks, that's the biggest takeaway for you to consider when you're going into 2018. Will I itemize, or will I just take the standard deduction? In my opinion, for folks or filers who have children under the age of 17, you're going to make out just fine. You will probably get a little bump in your tax refund, or the taxes that you owe will be reduced. For filers who do not have children or dependents, 17 and under, you may or may not fare so well. As a matter of fact, I have some stats here. Where are they? The Tax Policy Center is estimating that 80% of individuals will see a tax cut, 5% will see a tax increase, and 15% will see no change at all. I'll probably be one of the folks who falls into the 15% bucket, but that remains to be seen. So anyway, that's all I have, folks. Stay tuned for part 2, and that's going to talk about how the tax cuts impact small businesses. Small businesses and businesses alike have made out very well with the tax cuts. Can't wait to talk about that with you all. But in the meantime, I have to go. I wish you all well. If you have any questions or comments, please drop them below. I do read them. I do respond. Everyone have a blessed day. I hope this sheds a little bit more light on how the tax cuts and the changes will impact you going forward.